the hype surrounding generative AI won't be dying down anytime soon. Investors are pouring money into AI stocks this year, and market leader NVIDIA is leading the revolution. The stock up 188% this year thanks to its exposure of chips enabling artificial intelligence. Now, Ellen, you're more cautious on AI names like Microsoft that have run fast this year. Take us into your thesis.
So there's no question that generative AI and AI more broadly is going to be transformational to the economy. But I think just like the internet in the late 1990s when I was a tech analyst, the hype right now is a little bit bigger than the reality in terms of when it is going to happen. So if you look back at that metaphor or that example, what you see is people got very excited about companies like JDS Uniphase and Cisco that were building the underlying architecture for the internet. But if you look at who were the real winners in the internet space, first of all, they happened much later. So Apple, really not until 2007, 2008, when they came out with the iPhone. Amazon, Google, Facebook, these were all business models that barely existed back then, and yet those became the dominant themes. And we had to go through a very long correction period then between when the excitement was recognized and showing up in the marketplace and when it actually played out in terms of cash flow and market share. And so NVIDIA is a fabulous company. There's no question that they are the leader in the chip space for AI in general, as well as graphics. But are we going to buy it at 40, 50 times earnings? I would rather wait for a pullback. And I think that AI will be transformative, but I think that the market's just gotten ahead of itself, just like it has in prior times of technological transformational change. The market pulls forward way too fast, and it takes longer to play out. So we're being patient on that front.
And in the case of Microsoft specifically, there have been reports that they're going to be laying off more people. They have to file, I guess, with the state of Washington. So that filing today showing a layoff of 276 people, relatively small for a company of Microsoft's size. But what does that tell you about where we are in this tech spending cycle, right? We saw the big waves of layoffs, but does that mean things have sort of stabilized?
The thing about the tech layoffs is that if you look back over the last 3 or 4 years at how many employees these big tech companies had in 2019, how many they hired during the pandemic and in the last few years, and how many they're laying off, the layoffs are really small, just in comparison to how many people they've still added. And I think that's really, if you take a step back, that's partially a function of the lack of free money anymore, right? As interest rates have gone up, growth way out in the future, whether it's for IPOs or nascent companies, or even for big companies, growth rate out in the future is worth less than it used to be, as our discounted cash flow analysis tells us. And so investments that made sense 2 or 3 years ago when you had zero interest rates make less sense now. So I think that they're really just cutting back a little bit of the fat. I do not think that tech is in for a huge round of layoffs. Certainly not at those big companies that are so cash flow generative. And Microsoft in particular, we really like the stock. We really like the company. We just think it's gotten a little bit ahead of itself. And so we would cut and look for a pullback here to add more. But certainly their Azure business and their overall software business continues to be fabulous.
All right, we'll keep an eye on it. Ellen Hazen, good to see you. F.L. Putnam, Chief Market Strategist. Appreciate your time this morning.
Thanks for having me.